All right. Hello and welcome. Welcome to the Lion Show. My name is Robert Lyon. Today we have a return guest, which is super exciting because it's Dan Rogers, the man himself. So he's a former broker, so he's been in the trenches for a long time, and then he's currently an SBA lender, and he's just a great wealth of knowledge, and I'm super excited to have him back on the show. Yeah, tell everybody a little bit about you.
Yes, my name is Dan, and it does rhyme with the man. And for those of you who want to find me on LinkedIn, you can find me at danrogers.cre, and a Google search will take you right to my LinkedIn page. Happy to connect up there. And under my pronouns, it actually says the man slash a hoot. So at times, when people say, "Oh man, Dan Rogers, you're the man," at times is my answer. So at times I am the man. At times I am just a boy in this world. But yes, I am a broker, a former broker, connecting the business owners to the capital. And that's like everybody in this room is probably doing that same thing or wants to do more of that thing. And I managed to leverage that experience into the actual world of SBA lending. And I work for a nationwide SBA lender right now. It doesn't matter who I work for, but you can find me eventually. Have you seen some of the cool changes of the SBA policy? I don't know what we're even going to talk about today, but maybe SBA might be one of those things. But there's
Yeah.
some really, really cool rule changes that might benefit the clients of your broker world or even benefit your brokers because they can do more loans. Have you
Hmm.
seen some of those changes?
You say cool. Are you being sarcastic or are they actually cool? What are they? Tell me
No,
a little
no,
bit
they're
about it.
actually absolutely cool.
Really? Oh, what are they?
Yeah.
I'm
All
excited
right.
to.
So in the past, it was not easy to refinance an SBA loan with an SBA loan. Okay.
Yeah.
So that was like the past. And then in 2022, they had a rule that said you can refinance a 7A loan with a 504 if certain things apply. 24 months since first revenue. You have the original SBA authorization that was 85% of the loan was for commercial real estate, 12 months pay history, and there's a 10% savings. There's a lot of people who are left out in the cold because when they bought their building with a 7A loan, they dumped in a bunch of working capital, or there was a business purchase component of it, a lot of equipment that wasn't appropriate for the 504, and they would say the original authorization would say 84% of the loan is for commercial real estate or 84% and below. And those people would not be able to get from prime plus the max into one of the low rate 504s that was available that is available now. The rule has actually changed, which now it's 75% of the original SBA authorization must have been for real estate. So that 10% decrease in the threshold allows a whole bunch more people who bought a building and put a bunch of working capital into it can now get a really, really streamlined SBA 504 loan at a much, I'm seeing 3 to 3.5 point reduction in a lot of
Oh,
people's interest rate, which translates, the rough math, Robert, is about $3,000 per million financed. When we recast the loan out, we take in the 3 point interest rate savings, factor in for a prepay that may exist in there, factor in for closing costs. You're seeing about a $3,100 reduction per million of loan size. So your brokers are out there, if somebody's got a $2 million loan, like they can save $6,000 a month. If we do that over 5 years, like that's real money. So now you're looking at $360,000 is what you're walking into the conversation when you're opening with business owners. Is, hey, would you like to save 300, 400, $500,000 over the next 5 years, which is way better, way more interesting of a conversation lead or a conversation opener than, hey, can I save you a little bit of time and money? But we can actually articulate what the number is. It's much better. So there's that change.
yeah.
And then even more cool is the refinance rules, where if you've got a 7A loan and you want to refinance your building, historically the SBA was very, very reluctant to allow business owners to do cash out refinances. Like once the equity is in, it's in. Now you're allowed to refinance up to 90% LTV of the project, or sorry, the property, the equity in the property with very, very, very little restrictions. And so they're not going to make it be, normal business expenses or working capital, but like you can put in some debt in there, you can get in some easy working capital. So what the federal government is saying is borrow against the equity in your real estate. And
Mm.
so there's all kinds of programs. There's lenders like mine who have programs built out to accommodate these rule changes. And where your brokers, your community, if you're opening with a conversation which says, "Have you, Mr. Business Owner, I'm a broker and I'm a total stud broker or studette broker because I follow the Robert Lyon podcast, and there was a guest on there. Has anybody shared with you some of the latest changes of the rules for the SBA that can actually allow you to access your equity or save three or 4,000, maybe $10,000 a month in your payments? If that's your opener, you can actually illuminate a lot of conversations where the broker, is triggering the demand and
Yeah.
you're not delivering on the want. And so the difference is sparking an idea. Those people get paid a lot of money versus an order taker chases like somebody who is
Right.
looking for the low rate across the countryside. So I see those as two very different things.
But it
From the
puts you
broker
as the
seat is cool.
makes you the authority.
Oh,
That's the other thing
yeah.
too.
When you're educating, you're earning. That's what
Yeah.
it's. That's what it
Yeah.
is.
So one more SBA question.
Yeah.
So this is a unique question for you. A lot of my clients, I get them, let's say $200,000 in 0% interest credit cards. Okay. And
Yeah.
then once 12 months happens, those credit cards are no longer 0%. And I have
Correct.
some of them coming back to me now wanting to see if they can refinance by getting an SBA loan because their business is now generating a lot of revenue and
Yeah.
paying back some of those credit cards. Do you have any strategies that might work, or what do
Yeah.
you?
All right. So I think it's a great idea. And if a business owner, and I used to do that, and whenever I did it, I would tell them the rules of the SBA takeout for debt refinance.
Mm,
And I would say when you take this loan on, or when you take out 100,000 or $150,000 in credit card stacking, I always felt like 150 was like the max I could get people. Like I never able to break that ceiling. When they take out that money and they're in business and it's for working capital, it's to grow the business, it's to renovate the building, it's to buy a new truck, it's to buy more steel or tomatoes or whatever they're doing with the thing. And then that $100,000, $150,000 loan creates growth. We want to be able to clearly say, use this money for growth. Be able to pay this money back in a year. That would be best case scenario.
yeah.
And if you are not able to do it, if it's for people's salaries and those people's salaries over the next 1 or 2 years is where you're going to get your additional return on it, then the money that you spend has to be dollar for dollar tracked.
Hmm.
And I mean dollar for dollar tracked on your credit card statement.
Yeah.
Because the SBA underwriter is going to go through that thing with a fine tooth comb. If you've got a McDonald's purchase on there, it could kick back the entire credit card bill and say this is ineligible. And so you want to set people up for success and not failure. If people are taking on these loans, you want to
Uh,
make sure that they can refinance them because now you get the first loan and now you can get the second loan. But if you can't get the second loan and you've screwed them, now
yeah.
they're going to be super pissed. So the very, very easy thing to do is when you take those credit cards, uh, have them pay things that are clear and obvious business expenses.
Yeah.
Um, Equipment payments, just set it on a credit card if you can do that. Telephone payments inside the business, set it up on a credit card and just do that. If any kind of recurring bill that you can actually set it up and it's chewing into that $100,000, where the money that you would have spent for that expense came out of your business prior, but now it's coming out of these credit cards. Now you use the money that you would have spent for the business on those expenses. Now you can take that money and pay down your personal credit card. Now you can pay down your personal auto loan. Now you can take the vacation. If people dilly dally with this and they want to mess around and get a business credit card, then go to Maui on that shit. Man,
Yes,
that's a tough
it
one.
does. It does happen. Man. I advise
uh,
against that, but I see
yeah.
it.
So the biggest thing is either take it out in cash and put it directly into the business, and then use
Okay.
it for payroll, something like that. But the advice that somebody should follow, and I'm not giving this advice because I'm not in the business of giving advice, but the advice that somebody should follow
Mm.
if they were to go out and look for advice to follow is document it beyond what you think is appropriate and make it super, super easy for the business owner to navigate this. And
Yeah.
you say, as soon as we're ready, then we're going to refinance it. And there's also other lenders out in the market who are refinancing MCA debt to like a 4 to 7 year term. You can still get some let off in payment, and then you go from a credit card at 29% to a 5 year term loan at maybe 18% or 15%. It's a reduction in payment,
Yeah.
and it's not a revolver on their bureau anymore. And those are also maybe like another water step or waterfall step in between the SBA loan, because an SBA loan for debt refi, got to tell you, it's not the most desirous of loans, because now we pay off their
Yeah.
credit card and now they've got another $100,000 to go spend on credit cards.
Right. So the best thing is to make it structure for growth. And then you get the SBA loan.
100%.
And then once
Yeah.
you get the money, you got to play the bank's game to get the
Yeah.
funds. And then once you have the funds, you got to be creative, but you got
Yeah.
to use it for growth. I mean, that totally
Yeah.
makes sense. I just wanted to get a little clarity on it.
Yeah, and ultimately something that I would do a very, very early stage company that's still in the research and design. They're coming up with prototypes. They're trying to get contracts with the federal government. Like the payback is maybe, and if it is a payback, it's way far in the future. I think that credit card stacking is kind of like a merchant card advance. It's the wrong type of capital for that application.
No, that's fair. Some people just they do it and then they don't know what to do. And I think refinancing it and structuring their business, like a lot of beginner businesses, they need the capital, and then they need to transition to make everything, like you said, have your finances in order, have everything set up so that you can get another SBA loan, because it's just the cheapest money out there. So that's cool. And then, I mean, give we don't have to spend too much time on this, but give the people some hope that they know, like, if you're going to get an SBA loan, they're going to want all of the documents. They're going to want your blood type, what's behind your ears. They're going to like, I get that objection quite a bit, where it's just like, oh, they want my trust fund in there. They want all this stuff in there.
Yeah. So I don't even think it's so. Sometimes it's actually an objection. Sometimes it's just people stating the obvious.
Yeah.
And so I want to give you two hypothetical scenarios, Robert. So you and me are going to go into business. So I've got this business that I want to start. I'm going to be the brains. I have the experience. I've got a team. I've got contracts, and I need $1 million in total. But I've got 100,000, and I'm looking for an investor who brings in $200,000. And I come to you and say, Robert, I'd like you to be my investor into this company where you're going to be bringing in $200,000 of this $1 million need. I'm bringing in 100,000, and I'm going to get a loan for the additional 70 or $700,000. So I can give you my Venmo account or my bank statement number, and that's probably all I can give you. Would you give me that investment if I only gave you my Venmo
account? Right. No.
Okay. Would you want some sort of assurances on who I am?
100%. Yeah.
Would you want some sort of guarantees and understanding of how I'm going to run this business?
Yeah.
And if it didn't work out and I got hooked up on opioids, or I ran off to the Cayman Islands, and I had a house, would you want to put a lien on my house so that you could actually get your $200,000 back?
Absolutely.
And if I made really, really bad decisions, would you want to be able to sue me and be able to take everything that I'm ever going to make in the future? And would you want to punish me so that I would never be able to get another loan again from you?
Right. So that nobody get burned again.
So how about this, Robert? You are now the SBA, because that's the exact same thing that the SBA is. The SBA is the investor from the amount of capital that a business owner has down to what a conventional loan is. So we'll call it 65%. So in this example, we went from 75%, 70% up to 90%. I brought in 10, you brought in 20. That's 30, and now we have an underlying, 70% loan. Mm-hmm. You are in the business, and you wouldn't give me a loan without all of those securitized things.
Right.
If the SBA is an investor, would it be appropriate for them to not give you those or not require those things?
Yeah, for sure. They have to.
So, and here's what I just did there is I just gave every one of your followers the exact story that I give every single time I hear that. And I'm going to call it nonsense. Mm-hmm. So somebody wants $1 million. They want to bring in $100,000, but they don't want to guarantee their house. Go away.
I'm thinking about the Cayman Islands now because of you. That's funny. But no.
Yeah. And here's the other. You can use my stories. Anybody can use my stories. And so there you are again, Robert. You're at the carnival, mm-hmm. right? The state fair. Every state fair looks the same. Probably the same people, cousins, first cousins, like married cousins, all those things. I make fun of carnival people, but they're hardworking folks. but they have pretty strict rules, man.
Hmm.
At the carnival, if you want to go on the most fun ride, what must happen for you to go on the most fun ride? You have to be tall enough and you have to have enough tickets.
Right.
If you're not tall enough, aka your credit, income, the idea, whatever's not good enough, then you can't ride the ride. And the carnival person doesn't care.
Right. They don't care.
And if you want to go on the carnival ride, if you're good enough and you're tall enough and your deal's strong enough, you also must give them 5 tickets.
Hmm.
And if you don't want to pay, for the appraisal, and if you don't want to have a lien on your house, and if you don't want your wife to also sponsor, and if you don't want, don't ride the ride.
Yeah.
But if you want to ride the ride, you have to be this tall and this 5 tickets. Sitting there at the gate complaining to the carnival guy about you're not tall enough and you don't want to pay, like it's wasting everybody else's time, including the carnival ride person who makes,
Yeah.
not enough money to hear your boot. So when you
Hmm.
hear and when your broker connections are hearing people say, I don't want to, you say, go away.
That is the biggest thing for brokers is just saying no. So many people, you have so much more free time if you just told everybody,
Yes.
no, I can't do it
Yeah.
because they don't
I,
qualify, you know.
I just
Uh,
actually, I just put out a post on a Lineable earlier today about somebody was saying, "What are you ignoring in order to grow in 2025?" And I said, "Well, it's not ignoring. Like I think a better term is strategically lazy." And
I would love to be strategically lazy. That sounds
well,
fantastic.
well, absolutely. Have you ever fired somebody who was unreasonable and said, "Hey, I don't want to work with you anymore"?
Yes, yes,
That
yeah.
was strategically lazy. I would rather do nothing
Hmm.
than work for no purpose,
Right.
no chance of an end result. And hopefully we can laugh about it. Like I'm laughing about it internally because of this. The story keeps on popping up. But your broker community, there is strength in no. Because
Hmm.
and here's the real if I say, and I think I've said to you the last time, is my goal is to help the U.S. economy. I do it one business at a time. And if I talk to you, I help you help the economy, and I help the economy. Now we got 2 people helping the economy. And if you've got 8 people or 800,000 people following you, now we've got me, you,
Hmm.
and all of your people helping the economy. And
Right.
and here's how it goes full circle. If you tell people no, you have to give a lien, your spouse has to sign. Yes, if you go bad, you'll never get an SBA loan. And yes, they're going to crawl up your ass to get all those documents. Yes, that's the SBA. If you tell them no, and one of your followers who listens to this tells them no, and the next person they go to, they finally comply and they give the documents, they sign the deed, the wife signs. Well, somebody eventually gets that person to see it as it is. And then they get them the loan, and then the economy is helped. And so if all of your broker community starts saying no, and the business owner is like, oh, damn, I guess I do need 5 tickets and I do need to be 48.5 inches tall. Like, I got to figure these things
Yeah.
out. And if they just know how to figure it out, like, okay, you need to have these things inside your business financials. You need to have this stuff inside your credit score. You need to have this inside of your actual in bank assets. You need to do this for your taxes. And the business owner gets trained to do it the right way,
Right.
then at some point they say okay and they comply.
Yeah.
And part of our job is to educate people with what is actually available. And when they start telling me what they want or why it shouldn't be that way, I'm like, hey, you can go find somebody else who you're going to
Hmm.
boss around. You're not going to boss me around. You're not going to tell me how it is. It's that every person who's in business. And what's crazy, think about the construction person the construction foreman or GC for company who you and I work on a loan for.
Yeah.
And they have 2 prices. The first price is if you allow me to go do my job, it's $100 an hour. The second price is if you come out there and you tell me how to do my job, it's $500 an hour.
Yeah.
So, so if you're
Yeah.
going to tell me how to do my job, if you're just a business owner and you've never gotten a loan before, go away, or eventually
Mhm.
they're going to comply. That's our goal.
My only gripe is to do everything the right way is getting harder and harder and harder and harder. It's like then there's not enough education, I feel like, out there on exactly how to do it, right? So we have to
Hey,
educate people, like you said,
that's
but
the
it's
whole point
just
of this
part of it.
podcast. You
Yeah.
bring on people like me, and I've got a bunch of other people who are probably better at SBA than I am.
Yeah.
I'm funnier, but like they're better at the actual S thing of the
We'll stick
SBA.
with funny though. We're
Yeah, totally right.
good. Yeah.
So the the guidelines,
Mhm.
the goalposts, like the cliches, the goalposts are moving. The donkey where you're trying to put the tail on is somebody's walking and putting it on a different wall. Yeah,
Yeah.
there are less good deals in the market right now.
Right. Right.
And I think that there's a couple things that are attributing to this, which is there's a lot of people still waiting for the bullshit excuse is, oh, the new president. Okay, well now we know who the new
Yeah,
president's
let's
going to
get
be.
over it. Figure
Let's get over that.
out.
But
Yeah.
there's still no. I have to wait till after January 10th or whatever it is. Like, no, you don't. But you'll come up with another. There's a lot of people on the sidelines, and there's a lot of banks who said in 2022 we were here,
Hmm.
and in 2023 we're here, and we're starting to see some losses. In
Yeah.
2024, let's go here. Shit, we saw some more losses. Let's go here. That's probably better.
Mm.
There are banks full stop lending.
Yeah, that's what I'm saying too.
And so if that business owner who banks with Bank of Not Lend You goes in and says, "Hey, I'd like a loan," and they say, "Hey, we're not lending." There are some business owners that don't ask anybody else; they just don't get a loan.
Right.
They asked
That's
one person, so it must be the same thing everywhere, and so now like they're now not even in the market.
yeah. And then you just gotta figure it out and you gotta do it the right way. Like
Yes,
just because one bank says no, there's 30,000 banks in America, right? So
there's not 30,000, but yeah, it's a big number. Yeah,
it's something like that.
yeah. Hey, so pop quiz. I actually did this yesterday for a team of commercial agents.
Oh, cool.
How many SBA lenders do you think there are in the nation, Robert?
Uh, I have no idea. My
I
number is
know, I know
probably
you don't know,
real
but like
low.
just guess.
I was
Come on,
I would say I don't know 5,000. No, I don't
it's
know.
about it's just under 3,000.
Really? Wow.
Yeah. And how many actual? What is the total of banks and credit unions that you would typically call a bank, but they might call themselves a credit union? How many banks and credit unions in the United States?
I think it's about probably 20,000,
I think
30,000.
it's about six.
Really?
Yeah.
Credit unions?
I mean, I could
Yeah,
be wrong.
30,
I mean,
20,000
have
does
one of
seem kind
your
of high.
have one of your listeners or podcast people tell me how stupid I am and wrong I am in the comments. Well, because I think it's like six. That's what I tell people.
Yeah.
And ultimately, the difference between six and eight is not that big deal. It's not 60,000.
Right.
It's I don't think it's 10,000. And then how many private money lenders are there? Do you think? I've heard 1,000.
Yeah.
And I've heard this from a couple reputable sources. Like California has hundreds, South Dakota has 11, and so I think that we're going to get to an aggregate total of like there's probably 800 to 1,000 private money lenders. How about alternative capital providers, AR, PO, merchant card advance, credit card stacking? How many of those do you think there are?
Yeah, not very many. Wow, this hurts. This is crazy. There's only 4,000 credit unions in the United States.
Yeah, I love when I'm right or close.
What? That breaks
Yeah,
my
it's
brain.
I know. And so here's the thing: if you take a look at what it was like in 2019, there's probably 7,000. A
Yeah.
lot have gone out of business and a lot have merged, and so they're now one name and the same number of branches. So there's that. But again, alternative capital providers, I think there's probably 900, maybe 1,100. There's not 10,000.
Wow, you're giving me some inspiration here. I don't know. I guess like when you're in the world, you think it's more competitive because everything around you is like that world, you know. So you think there's
So
more people out there, but that's very small.
how many brokers of business loans do you think there are?
Not very many, I guess. Not very many good ones.
That's not what I said.
Sorry.
Yeah.
Yeah.
So I would say that there's an infinite amount of brokers, and
Hmm.
the reason why is there's constantly people out of the business and a
Yeah.
new person in the business. So the aggregate number may be the same, but like you could never call them all because like there's always somebody new coming up that you like the like painting the San Francisco Golden Gate Bridge. Like you're just always calling brokers. There's always
Yeah.
something new in the space. None of them are as good as you, Robert.
Try, man. That's inspiring though. Well, let's
Yeah.
step into that realm now.
Okay.
How do we become a good broker? How do we get better at sales to close more deals to help more people to boost the economy, right? Where
Yeah.
where do you start when you think of, let's say there's a new broker, they want to do better at sales, they don't even know where to begin. Like what
Yeah.
do you think their first plan of action is or mindset needs to be?
Okay. Man, that's a question that you asked me to think about, and I'm still thinking about it. I think that's a question that we all must think about all the time.
Yeah.
And I think it is three things. The order doesn't matter. The sequence doesn't matter. So imagine a movie and somebody throws at the hero a live hand grenade. Um, their mother's remote control for her heart. You know, like if it breaks, her heart stops, and the person's baby. Like they throw all of them at the same time, and the question is, which one do you catch first? It's a trick question. You catch all of them, knowing you're going to probably drop one, but you're going to always be catching all of them. The effort is always going to be on taking the request and figuring out what it is. Like that's the triaging. It's like what kind of capital can this person get? And how do I figure out the source of that capital? So that's always happening. That's like the hand grenade. And then the next thing that's always happening is you're always so you're where is it? What is it? The capital that they want? How do I get a loan file? Either going directly to the business owner, going to the capital providers that have declines, going to the CPAs, going to some sort of service like networking, whatever it is. You're constantly selling.
Mm.
You have to learn how to triage the capital. You're constantly getting that file, that business owner to work on from, again, business owner or referral source. And the last thing that you're constantly doing that you have to do well is probably negotiations.
Yeah.
We're constantly negotiating, and this is like the baby that they throw you. It's like your mother's heart is the how do you get the file? How do you get the file is really, 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 really important. But if you do that first and you don't know how to triage, what the hell is the point? You don't know where it goes. You have this great file, and now you don't know how to actually uncover what it is.
Right.
Or you get the file, you know how to triage it, but now you don't know how to negotiate with the lender and with the borrower, and you do this deal and they don't pay you. You're like, oh, I just negotiated that deal for free.
I love
That's
those, right?
fantastic. So that doesn't work either. So my point is like it is always three things.
Mm-hmm.
Is it
Let's break down the triage because I think
okay?
people know
Triage.
what a file is. I think people know the other one, but I think the triage may be confused.
All right. So triaging is I call it where are all of the bodies buried, and that is the complete understanding and knowing of who you're dealing with, what they have going on, and imagine you are a potter. Like you spin the potter wheel, you've got clay on it, and you're going to make something there that somebody's going to throw away when you give it to them. So when you do this, you've got the file is the clay, the amount of clay that you get on your potter's wheel, and then when you spin it and how you actually massage it, that's like how many capital sources that you have. Your skill, the more options that you have, and like where this thing can go, is the more refined and the beauty that you can put on this. Like if somebody was only brokering private money real estate loans and they passed up on credit card stacking, AR, SBA, USDA, all these other things, well, they could only give out that one option. And so they like, is it private money real estate? Yes or no? Private money real estate? Yes or no? So we as brokers, generally speaking, within 5% or 10%, the amount of clay that we have to work with is the person. Their credit you can't change. Their business cash flow you can't change. their net worth you can't change, their house value you can't change, their incomes of their spouse you can't change. And so they give you like a little bit of clay, and you're like, okay, this guy's got a 602 credit score, or he's got an 85 Jeep and he's got paid off, and he's got an idea to open up this little lawn care business. Like, I think I can make something out of this. And then there's times where people, they give you the file and you look at your potter's wheel and you have nothing. No credit, no cash, no prospects. They don't have a job, but they just want a loan so they can survive. And you like, you can't make anything with it.
Mm-hmm.
And then you're going to have the opposite of it, where somebody comes in, they've got $10 million of net worth in their commercial real estate holdings. They run three companies and they're netting $1 million each. And they come to you, they want to buy this building for $10 million, but they've never bought a building in self storage, and so they're new, and so they got a little bit of an issue. But you're like, I got 3 million net income, 800 FICO, 10 million in real estate, and now the clay that is on your potter's wheel, and now you're making this beautiful tall Ming base, and like you have all of these options,
Right.
beautiful, elegant options. So the triaging is the three basic ones that we're going to run into as a broker. And I'm not talking like insurance money. I'm not talking UBS or Mutual of Omaha type stuff. I'm not talking, you know, Sequoia Capital. I'm not talking these, $80 million, M&A deal, these mezzanine deal. I'm not talking about all this complicated stuff that when you get into businesses that are doing $50 million or more a year. Like when you get out of the middle market, like it's still small business, but when you get above into the middle markets, I'm not talking about that stuff. The basic business that you're going to see when you drive through your town, they're going to be private money loans that you're going to put out, whether it's for a fix and flip or some sort of rental home, or you're going to leverage the single family real estate that they rent out so that they can buy the equipment, so they can buy the business, so that they can use it as a down payment to buy the business or buy the building. So private money real estate is the biggest one. Is it private money real estate? Do they have private money? Do they have real estate? Is there equity? Yes or no? It's really, really clear. If they don't own real estate, it's never going to be a private money real estate loan unless you're trying to get them a loan because they're bringing in cash. Next is going to be accounts receivable and PO or contracts, more accounts receivable. Are they business to business? And is there some corporation that has promised to pay them via an invoice?
Right.
And leveraging those with a factor facility is a very, very profitable way to do business brokering. But if they're not business to business, that's not even an option. But if they are, do they have invoices? Are those invoices paid in 35, or do they have stuff that's 180 days old? They're probably never going to see that stuff.
Is government contracts, is that B2B considered or not? Do you know?
Oh yeah, absolutely. Yeah.
Okay, good.
Yeah. So whatever whatever your business is to an invoice.
Right.
Like people aren't paying you with credit cards or cash. Like there's not a cash register type of system. So we've got the private money AR, and then lastly, we'll call it four. The next one will be SBA loans. Some sort of small business loan that they get, and private money that will also be family office. I know that there's private money and there's hard money. We'll use those as synonymous. It's non-bank real estate lending is that bucket. So real estate, invoices, SBA is a kind of catch-all for everything. And the last one I would go would be like alternative capital fintech. And I know that you do some credit card stacking, and I have a couple questions for you about that. So credit card stacking, MCA loans, short-term loans based upon daily deposits or business bank statements, or short-term loans based upon personal credit score and W-2 income. So those are like your four buckets. Some people are only one, some people are two, some people are three, some people are four. If you can start talking to a business owner about more than one option, and maybe inside SBA, here's three options inside SBA. Here's private money, and here's two options inside private money. Here's accounts receivable, and here's four options there. Here's three options inside short-term debt that's none of those other things. be very, very competent after you do the intake, and you know all like you need to ask them how much in AR do you have? Are you business to business, or do you have a cash register? Do you have invoices? Do you not have invoices? Can I see your AR aging? Very, very simplistic, not elegant questions, fact based. Do you have this yes or no binary questions? And once we get that information, have you ever committed a felony? Yeah, I committed a felony 3 years ago. It was for fraud. Cool. SBA is not an option.
Right.
Like something binary, something, add these binary questions to your waterfall or your workflow. And at the end of it, you're going to say, I can get you 250 right now here. I can get you 500 right here in 6 months if a couple things happen on your credit, if a couple things happen on your next year's taxes, if you pay a couple things down with your business, past due. And then eventually I can get you a private money loan on the real estate. Once you get 25 or 35% down, we can then buy the building with a private money loan. So staggered it over time. That process that I just described to you, man, it took me years to figure that out.
Yeah.
And it's hard because so many of these capital sources, let's blame the educational system for a second, shall we? Um, we're not taught about business finance in high school. And if we follow Susie Orman or Robert Kiyosaki or not Robert Kiyosaki, but Dave Ramsey, don't ever borrow. Borrowing is bad. And then if we follow Trump and Kiyosaki, borrowing is good. I saw the other day that Robert Kiyosaki owes $1.2 billion in debt.
Mm-hmm.
And somebody said, well, yeah. And somebody says, well, don't you think that's a lot? He's like, there's another question, which is, how much is that $1.2 million bringing me in? And they said, well, how much does it bring you in? He's like, I can't tell you that, but it's paying the debt just fine, I can assure you. So question for you around credit card stacking. It's something that I used to be able to talk about. What is kind of the range of outcomes? Like what's easy for somebody to get as a credit card stacked capital stack? What's the most you've ever seen? And what is kind of the math between like how much they get?
Yeah. So, I mean, right now the banks, like everybody knows, like not everybody knows, but the banks are still giving out credit cards, but they're not giving out the big $20,000, $30,000 credit cards that they used to, right? They've gotten a little bit smaller. So that's why the stacking is the most important part. So I can get just about everybody a guaranteed 50,000, right? I can get, if you work with us, we'll fix your credit. We get you 50,000. That's pretty much locked in for sure. Past 50,000 nowadays, you got to have good credit. Like, got to actually have credit history, right? You got to have shown
like a 700 score, 650.
yeah,
like where do we need to be?
At least 700 or higher, right?
Wow.
So,
yeah.
And then you have to have business revenue, and your LLC has to be over 6 months, preferably over 2 years old, right? Or at least a year old. And then we can get into the business credit cards. And if there's revenue, we can also get lines of credit and stuff like that. If you really want to get, like you said, like 150,000, you got to have at least a 750 credit score. You got to be making more than 100,000 a year. You got to have a business that's a year old or more. And your business has to have already had some credit history. A lot of people come to me with an LLC that's never had a credit card and it's not in any of the systems. So I'm just going to get denied for everything because they've never seen your business and your business doesn't exist. Right. So that's kind of the main things that we see. And then also what state you're in is kind of a big deal, which is kind of odd. But in California, for some reason, there's a lot more banks that pull from Experian, and I can kind of work my little magic and I can get more money from California and Florida and New York than I can from somebody who lives in Missouri or Arkansas or something like that, where there's just not as many banks who are actually lending. So those things kind of matter. But yeah, the exact math, it's hard to tell because a lot of times there's stuff that they did with banks when they were 18 that can still affect them when I go and do credit stacking when they're 40, right? So it's just kind of like some banks have their own internal system.
So the same banks that are providing those credit cards are the same banks creating SBA loan models. So I want to just see if you hear any similarities. So my bank and like a lot of other banks. So there's banks out there right now who have created or are in the process of creating, call it a score and go, $150,000, $250,000. Send us 3 documents. Let's pull your bureau. Let's pull the SS score for a business. I forgot. And if somebody is 2 years in business, profitable, 720 credit score, and the net earnings of the business is $150,000. I'm sorry, $70,000 a year per person. So if two people, husband and wife in business, and it's 140, they get automatically $150,000 to $250,000 in their account in
Wow.
like 4 weeks.
That's cool.
But doesn't that sound exactly like your credit card stacking?
Yeah. So it's just getting tougher and tougher. You got to have better files.
Yeah,
Um,
and so but that person who's got a 720 score has proven to the world no matter what they're going to pay their bills.
yeah, exactly.
And if they're making $150,000 net from a business, that takes some sort of figuring it out.
Mm-hmm.
And if you're making $150,000 and your bills are on time and your utilization is the right percentage, so from an SBA loan, $150,000 is going to cost you about $2,000 a month.
Right.
If somebody's making 150 grand a year, that's 24 grand that is going to be inserted for their loan payment. Somebody making 150 probably can cut 2 grand out of their monthly bills and make this payment, or they can grow their business. Same thing with your situation where if somebody gets $150,000 with a credit card and then it comes due, it could be a really large payment that they have to now navigate. Like
Right.
the minimum payment on 150 grand is probably what, $3 or $4 or $5,000 a month.
Yeah, it depends how long, if it's still 0% interest or not, right? But yeah.
Of course, of course. So
Yeah.
anyhow, it's very interesting to be able to triage, understand what is it, and I say the capital is like a grocery store. And if I told you you're hungry and you need capital, I say go in the grocery store, and you say I'm looking for beans, and I'd say go into the grocery store and get beans. I just want you to answer this question as honestly as you can and don't think about it. If I said to go into the grocery store and get beans, where would you go?
The bean aisle.
Okay, so what on the bean aisle, what would you be looking for?
Black beans. Kidney
And
beans.
on the bean aisle, and you're looking for black beans, are you looking for canned beans or dry beans?
Yeah, canned beans.
Okay, do you like that's the whole point I'm making. And so where else could you go inside the grocery store to get beans?
Maybe the produce section, right? Or like
Okay, and in the produce section, you'd see fresh beans, right? Where else could you go in the grocery store to get beans?
frozen beans, right? Or something. I don't know.
Okay, cool. And then where else in the grocery store could you get something that's like beans? You could go to the pharmacy department and get Beano. So the point is if capital is a private money loan is on a completely different aisle than an SBA loan. It's on a completely different aisle than the alternative capital. It's on a completely different aisle than the AR loans. Like they're all beans or have bean in the name. And you could also go to the candy aisle because what's in the candy aisle, Robert?
Some sort of candy beans.
Jelly beans.
There you go. Yeah.
And you could go into the toy store or the toy aisle. Why could you go in the toy aisle?
There's probably some toy beans.
There's Beanie Babies.
Ah.
So if you give any kind of confusion and don't have very, very clear options here, business owners will get lost. And they'll be buying Beanie Babies or Beano when they should have been in the produce section.
Right.
They don't know, and that's the job of the brokers to educate them. And so even inside the black beans, and so now black beans is private money. How many different types of black beans are there?
Right. Get lost.
4, 6?
Yeah.
And so each capital type will have companies that offered something different. There's barbecued black beans. There's sugar-free black beans. There's organic black beans. There's this. And so now is this a private money real estate loan? Great. Now I'm going to talk to a private money real estate lender who lends in this state on this particular type of property with this particular type of loan that provides this particular type of terms. That's that whole triaging and waterfall. But if you're trying to get somebody an SBA loan and they have a felony, you're not even in the right aisle.
Right. So you got to be able to discern it, and you got to learn all this stuff.
And so that's the triage. When I say triaging, I mean like be able to understand which capital type is it, and then find the company in that capital type that will deal with the issues that your people have, because everybody's got the issues. Yeah, that's a good question. So this is like a long question. Let's like, how to become a broker? figure that piece out.
To the best of your ability. I mean, the best way I've found
Yeah,
is just call the banks and ask them a bunch of dumb questions, right? That's the only way that I've been able to educate myself fully
yeah,
is by literally calling somebody at the banks. They're all on a salary. They got nothing else to do than to answer your
yeah,
questions. So call the banks in that area, figure out if they can do it. If they don't do it, have them give you a resource for who can maybe do it because they
yeah,
might know more than you, right?
yeah.
And
So
then you build a relationship.
I asked this 6 questions when I'm brokering a loan. In fact, I was doing this for a client just the other day. It's a private money loan. So I'm calling. So I had to I think I sourced for geography first.
Yeah.
Nothing means anything unless I know that they can lend in the right state.
I'm sorry, your mic
So
is still kind of gibbering, and I don't want to miss your 6 gems.
is that a little better?
Yeah, it's a little better. Okay, geography first.
Okay. Yeah. So I have a deal in Florida, and
Yeah.
I would say, hey, you're a private money lender in Florida. I've got a deal in Miami. Do you lend in Miami? Yes. So this is the deal. The next biggest thing that is the issue for me is the industry. I said it's an event center. It's not multifamily. It's not a spec home. It's not a self storage. It's an event center. No. I can now ask 2 questions and get a no. And I call the next person. Miami Event Center, yes.
Right.
And they said, how much a loan? I said, I need $1.8 million. So, oh, we only go to 1 million. Okay, got it, got to know. In 3 questions, I got to know. And so eventually I'm working with somebody who's going to be able to do the deal. So the simple questions that I ask every single capital provider, what are your geographic restrictions?
Yeah.
Next is what are your loan size restrictions? What's too small? What's too big? What is the industry or industries that you will never lend on?
Mhm.
And what are the flukes or flyers that if you saw a perfect deal that you would lend on, but you don't like to?
Huh.
Like I'm asking what the strike zone looks like.
Right.
After that, we'll go for the purpose. This is a private money loan that's going to be a bridge. This is going to be a refinance on a single family house. It's an investment to buy a business. This is going to be a home equity line of credit to buy a new dump truck. And so now we have the actual, what is this thing for? It is to refinance my commercial real estate loan. It's to buy a business. It's to install solar. Um, it is to pay the IRS. Like, what is it we're trying to accomplish here? Next, how are they trying to get this capital? Credit, cash flow, collateral.
Right.
Like,
Yeah.
it's going to AR, FICO, or my business.
Yeah. The 3 paths of lending.
Exactly. And my path of lending. Lastly, when they went to their own bank, why did their own bank say no? This is a question directly for the business owner. Why did your bank say no?
Right.
And for a bank, I'll say, why do you say no? Character issues, credit issues, or are you only working with people 750 and above, or will you go down to 550? Are you only working with startups, or will you never do a startup? I've got somebody who a projections based loan. Will you do that or not do that? They went to their bank, but their bank doesn't do projections based loans. They went to their bank, but their bank doesn't do ground up construction, but they'll do big renovations. This is a ground up construction. They went to their bank, and the bank said no for all of these reasons. When a broker, when anybody, you or me, asks those questions of the business owner and then of the bank, we can then start mapping that to an Excel spreadsheet or a database very, very quickly. And then you just call up and say, I have 2 options for capital. One's AR and one is private money real estate, like as a hypothetical. And you call up AR companies like, hey, I've got a deal in South Dakota. Do you do deals in South Dakota? We don't do that. Yeah. Okay. And so now they finally go in that does South Dakota. Like, got somebody who's got $600,000 of business invoices, but the businesses invoices are $15,000 or smaller. We need to have $100,000 invoices or bigger. So now you can sort and find your actual capital provider by asking what they don't do, which does or does not fit your actual application. So you should know, how big is your AR? How many different companies? What's the age of it? If you're going down the path, here's what my AR looks like. It is only one. There's only one company that they work with, and it's one invoice. They're like, that is way too much concentration. If this big company goes out of business, then my small company is also out of business.
Yeah.
Same thing with the private money. I'm in what's a typical private money state? Texas. Hey, I'm looking for a lender, private money lender in Texas that will provide a second lien on this building. Good luck with that, because Texas, they have some very very peculiar rules. If it's a house at all, it's just not going to happen. And most lenders will not do a second lien in Texas because of the rules on how they can actually foreclose and not be notified, like whatever it is. But it's really, 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 really hard to get a second lien in Texas. But if you find one, like that's what you're solving for. They went to their bank and the bank said, I'm not going to do this loan because we don't do second liens in Texas. Like, okay, that's just what their bank said. Now you got to solve for that variable in the equation. And that's it. Like, that's how we triage.
But this was fire, man. We need to do it again. We'll have to do
Okay.
another one in the
All right.
2025s.
I'm open. I mean, the last thing we talked about, which is the opening.
Yeah.
If you take the exact same model of where, how much, for what's it going to do, and what are the challenges, you take that exact same modeling and you call business owners with that.
Yeah.
Where's your business?
Yeah,
what kind of loan are you? It works both ways.
That's so
And it's a great opener, especially when you're networking, when you meet somebody who's a business owner. Like, what are your challenges? Capital? How much? What are they saying? Why do they say no? What are your issues? You just drill down on that stuff really, really fast.
Yeah, and you're able to take that information and you have everything. I mean, typically I take that info and then I make them fill out a form so I can kind of shop it around. But yours is a little less intrusive, right? You're not like, I mean, you have to get the nitty gritty. But first of all, you just want to find a bank that says, yeah, we could probably do that, right? So you need the very minimum for that. Then you get more.
No, I actually, the first thing you have to do is, which aisle of the grocery store am I going to go to?
Right.
It's probably it might not even be a bank.
Yeah. Yeah, exactly.
And so, I've had people come in, and I just realized we've gone an hour, and it feels like it's been 6 minutes. But I've had people come in where they said, I've been to 15 different banks, and nobody will give me a loan. And I do my intake, and I say, okay, how much do you need? And they say $500,000, and I'll okay, I can get you that in 14 days. Or like,
yeah,
no bank said yes. I'm like, I'm not going to a bank. You've got 10 houses that are free and clear. I'm going to go leverage one of those. Well, nobody else figured that out. It's like, I know nobody else was looking at your entire thing. They all triaged it wrong. They all said you had a heart attack, but it's just you have indigestion.
Right. Just gas. No,
just gas for that Beano. So, yeah, man. So, people can I plug myself again?
Yeah, let's do it. So, what's the best way for people to get in contact with you, and then hopefully, if they bring you deals, they have these 6 questions already, right?
Yeah. Oh my gosh, that would be amazing. You can find me on LinkedIn. That's probably the easiest place. Just do a Google search, Dan Rogers, ROGERS-CRE. That's my Google. I'm sorry, that's Google. That's my LinkedIn handle, if you will. And I do a lot of work on LinkedIn, so I'm very, very searchable. If you look inside my contact information on LinkedIn, you'll see my contact information. So don't ask me, hey, can I have your phone number? Because I'll think that you're a dummy. Because I give my phone number out into the world for better or for worse. That's where it is. I mean, yeah, if you know what the rules of the SBA are and you lead with that with your messaging, you're going to become really impactful. Maybe, Robert, I think we should do an episode on how to use the rules of the SBA as your opener to get more deals.
I love that. I think people need that. So that'd be good.
Okay. Very good.
Well, thank you everybody for listening. I'll have Dan's information in the show notes down below. Feel free to reach out to him or just tell him how excited you are to hear him on the podcast again. I think that would be good. Or if any questions you have, feel free to reach out. This was great, man. Thank you so much for coming. Any last thoughts before you wrap up?
No, I mean, this is 2025, I think, is going to be an absolutely exceptional time for America, for American history, if you just ignore what people are saying. just everybody who's listening to this, if you can just like imagine I'm that uncle at the birthday party that it's got some sage wisdom for you. Got a little gray, I've earned it. Stop concerning yourself with other people are saying. Like another conversation that 2 people are having, like I don't care if it's reality TV or entertainers or political people, who gives a crap?
Right.
Focus on having engaged sales conversations with people whose whose challenges are in line with what you deliver in terms of services. Just stay there, focus there, ignore everything else. If people start, and this is part of my post earlier, I'm going to use it twice today. If people start telling you about their dream that they had last night, say, hey, in 2025, I'm not listening to anybody's like last night hallucinations. And if they start talking about what two reality TV stars were saying or what two NFL people were saying, like, hey, in 2025, I'm not going to concern myself with anybody who's having a conversation unless it directly impacts me. So let's talk about what you actually want to accomplish. Just ignore that malarkey, man. That's it. That's my words.
Yep. Get locked in. Let's focus.
Locked in.
Make some
Let's
money
focus.
and help people get some money.
Absolutely.
Right. Thanks everybody for listening. Talk to you soon.
Take care, man.
Bye.